Hey guys, we're going to start to talk about Fibonacci today. It seems to be a topic that was pretty, it created a bit of an awakening almost. And I was almost expecting it. I was almost expecting it. It has been pretty quiet from a good portion of the group for a little bit, and then Fibonacci was mentioned, and all of a sudden got a bunch of messages again, and people suddenly had the time. And I'm not saying that it wasn't legit, that there wasn't the time there, but all I'm getting at is that Fibonacci is generally what people think of when they think of advancing their trading. So it was really important to have a good base because uh, understanding the impulse moves and understanding swings versus impulse runs, where the volume is, how to start and choose your anchors. Well, that all goes off of the base that you have built already. So it goes all off of support and resistance, trend, and supply and demand. So I've gone ahead and I've marked up just with some really simple weekly levels. For the intro, we're just going to stay on the weekly. Um, well, actually, one thing I'm going to do is I'm going to get rid of my extensions and set the color to something that stands out a little bit more. Actually, we're already using yellow. Let's do that. And we'll save. Okay. So when you're looking at Fibonacci, you look for trend. You're helping to identify trend. You're helping to identify. Uh, you're helping to identify take profit zones. You're helping to identify profit taking cycles and then trend continuation off of those levels. Excuse me. You're helping yourself to identify targeted ranges, and with all of that comes calculating your trades just all that much better. So if I look here, this move from, oh, where are my timestamps? From here to here is an impulse run. That's an impulse move. And what I mean when I say an impulse move is you grab your high, you look to your low, and there's almost no indecision. There's almost no bullish momentum coming back in this bearish run down. Excuse me, I'm a little bit sick, and I'm also, sorry, still working. So, or at least I'm not working. I went home, but I forgot to shut everything off. So you look for this impulse run down. What you're looking for is decision, like heavy decision making in one direction. So you're looking for heavy decision making to the downside in this case, with very little bullish involvement. And what that means is that you don't ever have a bullish candle that really overtakes the high of the last candle, right? So you could see that, or the last bearish move, right? So for this bullish run back up right here, it never really overtakes this high right here. Okay, and that's important because you don't want to trap any of that bullish momentum in those impulse runs. Now, impulse runs aren't always the way to go. When you look at this, right, there's a significant level right here that this really, while it did breach this high here, this would be the swing low, right? So this would be the swing low. So I would rather look for, especially where it's on a bigger time frame and it tests that twice, and I'm looking for my retracement. Um, it tests it twice. It's not that much lower than where we did stall out in the first place, and find that impulse low. And you can see that the volume that brought it back down there and tested it twice, that's really where a lot of the orders were taken off, because that's where we drifted higher and started testing some of these levels. So from there, that would be my swing, right? So here's swing high to swing low. This is just the overall trend, right? The overall move itself. Well, that's where it stopped. You'll notice that when you're looking at my fibs here, I've got 50% marked off as the lowest that I go. I do occasionally use 38.2 and 23.6. We'll get into this a little bit more. They're more used when I'm looking at impulse runs. So for this impulse run down, for instance, this impulse run down, I would have that 23.6 as just a quick, a test. Really what I use it as is validation of my extensions, right? And I don't have my extensions on right now for a reason, because we don't want to get into those just yet. So if we look, the market started trending pretty hard here, right? We just outlined this run down here, and we've got our anchor high. We've got our, sorry, like I said, I'm really not with it right now, 100%. Got our anchor high. We've got our impulse low. And we've got our swing low. Okay, so we've got our anchor high, our impulse low, and our swing low. Well, now if we look, we could, sorry about that. Now if we look, we have another opportunity here. We have another opportunity to differentiate impulse and swing moves. So if you look at this little section right here, we've got our supply zone that starts this very decisive downward move, right? So we've got our impulse run and our swing run. Impulse and swing. So for a case like this, right, where you've already had a very strong trending move, you want to make sure that you're capturing what everybody else is capturing and that you're looking at what everybody else is looking at. So give yourself both levels. So what I'll often do to capture both an impulse level and an impulse run and a swing run is if the fib structure of that impulse run is valid, right, and it holds. So you can see that we've got our low here. We hit that negative 23.6 before testing our next level. And if we were to just add in, we're not going to keep this. If it were to have filled that level right there, that negative 23.6, then I would that would give it the fib validity, that I want. It didn't. Had it done that, I would have marked off this 61, like this zone right here, kind of as a change control zone. I typically do it with just two price levels, and I just mark off like 50% impulse and 61% impulse. But it didn't. So what I'd look to do is just see what everyone else sees. I would just capture what everyone else captures, and you can see that our 78.6 lines up really well with our price level right there. Now we never quite filled. That front ran by just a short amount. I wouldn't have taken that trade because we never filled. But had you had your 61.8 marked off right there, maybe that's a different story. But what I'm getting at is the differentiation between impulse runs and swing low, swing high and swing low, and swing moves is it can be drastic and it can be difficult to identify. For instance, if you look here, here's a swing high to a swing low. So you've got some important levels, right? You've got your swing high, and actually let's pull that down to the true length swing low, sorry. So you've got your swing high to your swing low. Let's mark off our time. Swing high, swing low. And let's change the color so that we differentiate again. Now this is identified by the overall move, right? We're still on the weekly, so this is a huge move. But there's lots of other moves in between. So this is a pretty drastic move. So what I would do is mark off, and again, I don't typically have that 38.2 on there. It's okay to leave it. You can see that it actually gave, it coincided nicely with the start of that little uptrend there, that little channel. But what I would do is just mark off the swing 50%. Maybe the swing 61.8 if it lined up with other structure. Swing 78.6 does. So take that off and just identify distance and swing 78.6. And we'll just change the color on that as well. Okay, so you've got your swing high, okay, you've got your swing high, and you have got your swing low. From here, if you look at what the chart's giving you, right? So I wouldn't consider this little jump here any sort of my initial statement of when you're looking for impulse runs, you don't typically want it to retrace and break the candle above it. Really, that's just a guide for shorter term runs. If you want to include something like this where it just tests the next level that it's already broken, that's perfectly fine, especially on the higher time frames where you're going to get those oscillations as the lower time frames become overbought and oversold. That's perfectly fine. So I'd look at what I've already got marked off, and impulse run to me is where we get the decisiveness down to the first level that it starts to peter out. Okay, so you've got that run down. Your 38.2 lines up nicely with some structure. That's okay to keep. Never really fills. So strong trending market. That's perfectly fine. Well, what if we were to change this high here? It gets a little bit closer. It doesn't quite fill either, but that's one other thing we'll get into is how do I manipulate that swing high or that impulse high to be something that's not necessarily the swing high when it's still very close, right? So when you're looking at this little area of consolidation and your swing high starts at the true high, your impulse run can either start at the swing high or you can identify your impulse run to start with the candle that, or the last high point for the candle that broke that strong resistance or strong support in this case. So you look, here's your range, here's the high right before the candle that pushed through and broke that. So that's where the volume was to take out those lows. So it's okay to start at this high here. Now, if you want to consider something like this, this is a short-term impulse run. That's perfect, right? You've got all bears. You've got the candle that broke. Let's just extend this up a little bit. Fortunately, I won't be able to go back far enough because it's on the weekly. But so you got the high before the candle that broke your support, and you've just got straight bears. Here's a perfect little impulse run. You can find these all over. Likewise, if you look at that run down, okay, so here's that first impulse run. If you look at that next little push, same thing. The high from the last candle that broke this level here, then it pushed straight down, gave a nice retracement back to the 38.2. So when I use the 38.2, it's either off of a high to high or a low to low, or off of an impulse run, because those are typically your strongest trending markets. Next impulse run you can find, the high before this candle's broken here, or before this resistance is support, excuse me, is broken here. Just a quick little run down, and that gives you a perfect little 78.6, formulating your supply zone. Your 78.6 and your now resistance meet up right there. That's a perfect short. And I'm willing to bet that we get some sort of profit-taking oscillations on the way down. Yeah, we fill that negative 61.8. We blow straight through the negative 23.6. That's nice. But so this is perfect right here. And if you look at this on the daily or the 4 hour, this is actually going to look like a swing, right? It's going to be a swing run. And that is perfectly fine. That it's going to look different on every time frame. It's just a matter of how you're mapping it out. And I want you to get used to differentiating between swing and impulse runs. So if you look here, right? So this is where we created that last short by doing our impulse run down, right? So we get that 78.6 fill. Well, that 78.6 from here to here now becomes a pretty decent impulse run, right? Straight down. This level right here, this 61.8, never fully gets broken, and it holds 1, 2, 3. Let's see, it holds 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 times before it's broken. So on the weekly time frame, maybe around time 5 that this is held, mark that off so that you've got impulse 61.8 strong hold. Give yourself a little bit of information. Now you don't have to keep it on your chart, and instead you can start to look to the upside. Now you've got a target, right? Now you know that if price finds a low here, makes a run up, well, we've got strong support here. Grab your low. This again would be a nice, this technically would be an impulse, a swing, because there's nothing that's truly differentiating this move from an impulse run. So it works as both, right? Because it's still a higher time frame move. You've got bulls and bears in there, but it's also very decisive. So this really doesn't have a distinction. This doesn't have a differentiation. You look down here though at this 61.8 paired with that support. That's a nice jumping off point. From there, where's your target? Well, your first target could very well be that that bearish 61.8 that's held. So if we look elsewhere, right? We get a nice, another nice retracement down, another nice pop off of here, off of that same level. Let's mark off some additional support. So now we're going to start playing the trending game, right? So now you can see we're starting to fill this channel and formulate this channel here. So now, as we break out of these lows and we finally break up above this this strong hold here, or we get a nice reaction and we fail to break a little bit lower and refill that channel, mark that off, and there you go again. That lines up perfectly. So there's a decent long opportunity here again to fill here, and then maybe since this is times 17 that has been tested, now maybe you start to watch for some of your profit target fills, which you get both. That's something that we'll get into. Right now we're just looking at swings and impulse moves. And when you're at this point, right, when you're at this point on the weekly, it really doesn't matter how well you distinguish impulse runs versus swings. Another example here, find your low, swing low, you can do your impulse stop or your swing. I'm going to choose the swing high because it's right, it doesn't really fall from that area. Once we break these lows, well, now I know when I say these lows, once we break kind of this zone right here, now I know that we've got some substance. Now that I know we've got some bears, so that could very well prove to be the high that gives me that volume. That's the fib structure I want. So when I'm looking for that retracement down, I've now got this area which has built confluence over the course of several months. We've got decent support, we've got that channel low, and we've got our fib off of that structure that held. And likewise, just now we see it stalling out a little bit. Well, that's right at the 78.6 from this run up here. So if you're trading Nadex, for instance, this would have made a great daily. If you could find some other structure there, it would have made a great daily to get at or below. I don't see much. Well, it could do right here, but that's a bit of a reach. Just the fib structure really is all you have. But now, right, so we've actually got some decent, it looks like some decent structure, some decent fib structure on the lower time frames between these. So let's drop down to, let's say, the 4-hour, and you can just see how drastic that is, how drastic of a difference that is in terms of the movement you're given. So now we can go swing high to swing low. Okay, so here's your overall swing. Your 61.8 lines up really well, and I chose this as my swing high because this is mid supply. There's a lot of volume here already. But if you were to want to separate and start to look at this in terms of impulse moves, let's take here. So where's the last spike before we get the decisive run down? Right here. And where do we stall out for a little bit and you're looking for a retest of this zone? Right here. So this is our impulse run out of this overall swing move down. This is your impulse run. We get that 50% retracement in between that 38.2. We've got some decent resistance right at the bottom of that supply zone. That's a perfect short entry right there. Again, impulse run down. We may not get the 23.6 fill. Oh, we do. We even got a 38.2. No structure there. So unless I could find some, I probably wouldn't look for the short, especially off of a 38.2. But it still holds. Another impulse run. Here was your 38.2. So you look left. Here was your 38.2. Where's your next structure? Let's go back to that zone. So here's your 38.2 retracement. Let's go structure to structure. Impulse run down. Perfect 61.8 retracement. And if you could find another bit of structure there, nice little spike. Sorry, nice little spike right here. Oh, didn't do what I wanted. Nice little spike right here. And you get a perfect 61.8 short coming out of it. So you can see that the impulse runs are essentially sitting within those higher time frame runs. You look here, find your low. Again, you get a nice perfect 78.6 retracement right at some resistance. Great short opportunity. But when you're looking within, maybe you're going to look for your impulse move. Here's your impulse run down. You can see that there was a lot of consolidation around here. Here's the last candle that really broke below that level. You can see the tests. What do we get? We get a nice 50% retracement out of that level. And then we come right back to the 61.8 before continuing down. Now, the further we get into this, you'll actually see that this ended up being right here. This probably would have been, that spike would have been the negative 23.6 would be my guess. Yeah, so we hit that negative 23.6 pretty perfectly off of that bull run. You'll start to learn how we factor in completions in all of this. But without doing this yourself, right? Without trying to identify swings and impulse runs yourself, hearing someone talk and looking at them do it can be a little bit, cumbersome and a little bit overwhelming. So what I ask is that on a weekly time frame, and then a weekly time frame for the overall structure, for the overall picture, identify, as I did, some zones that you want to identify swings and impulse runs. And then on the immediate, let's say last 10 weeks of trading, go down to the 4-hour and identify some of the smaller time frame swings and impulses. And for that, you're going to be looking for the impulses to be direct moves within those overall swing trends. And they can be within channels, they can be within wedges, they can be within supply zones or change control zones. It doesn't matter. Go wild. I want to see how you're digesting and how you're interpreting impulse runs versus swing runs. What I do ask is that when you're doing this, you have your chart marked up with support and resistance. Annotate to yourself. Give yourself supply and demand zones. Mark off your time zones, and your chart's going to become messy. So for me to read it and for others to read it, I really do encourage you, and I ask that you record a video just like I just did right now, just identifying like 2 swing moves and 2 impulse moves based off of structure and based off of what you've mapped out for yourself. But it's really important now that you start to record yourself, because we're not going to be able to distinguish looking at what you've identified. I'll share this chart, and then this is the end of the video, so you will have watched this already, but try and look at the chart without watching the video. Just open this up, maybe the next day. Just open this chart up the next day after not watching the video and see how difficult it is to interpret what you're looking at. Even though I like to think that most of my stuff is fairly clear, this isn't. So just imagine that when you're presenting this to someone else, it's going to look like this, and it's going to be very difficult to digest. So really quick introduction to swing and impulse moves. It's going to be a lot of content in a short amount of time, and it's going to be overwhelming at first, especially once we start to get into completions, but we're going to spend a lot of time on Fibonacci. So again, your homework's there. Please, please, please record yourself, and I look forward to seeing it all.